Here we go. So hello everyone and welcome to the third installment of the VIVENTOR peer-to-peer webcast. My name is Andrius Bolšaitis. I am the CEO of VIVENTOR, a peer-to-peer investment platform. And this is our third installment of a series of our webcasts where we invite our loan originators and investors to discuss what is going on in the industry, what is going on VIVENTOR platform, and to share any ideas and concerns, and of course to answer all the questions that our investors are asking. As was discussed and announced earlier, we announced that it is possible to ask questions for myself and my guest today on Sli.do. I thank all of you who asked these questions. We will try to answer all of them during this call today. And today with me we have Melis, who is a founder of Ibancar, a loan originator from Spain. And we have Lars Wrobbel, an investor and also a blogger who writes about peer-to-peer investments in particular as well. So welcome to VIVENTOR peer-to-peer webcast, gentlemen.
Thank you.
Hello.
To start, I would like to start with Lars. Maybe Lars, as you are also invested with many platforms, not only us, of course, you have a lot of probably ideas and experience that is very interesting to not only us but to the whole investor community. Can you tell us maybe a little bit, a few sentences about yourself for those of you, for those few investors who still don't know you, who you are and how you came to the industry, and as well how are you dealing right now with the current situation in the industry?
Yeah. So as you said, I'm also a peer-to-peer blogger, and I started in 2015. So the blog is already really old, but it's not my main business. So I'm mostly focused on the Amazon marketplaces and published over 200 books. And so I have a diversified online entrepreneur portfolio, I would say. And this peer-to-peer blog is one of my passion projects. And I'm also invested in VIVENTOR with a small, with little money. And yeah, right now it's a really interesting situation because everyone is running away from the peer-to-peer platforms. I think you feel it also on VIVENTOR that you have less money to give it out to your loan originators. But I think at this time, or I feel it like since the last week, that the investors are coming back. Maybe you can confirm this, I'm not sure. But yeah, for myself, with the Corona crisis, I didn't stop anything on the peer-to-peer platforms, so I just continue my investments. But I'm mainly focused on the stock market, so I have around 10 to 15% actually in peer-to-peer lending, and the rest of it is in the stock market and also in cryptocurrencies and some other assets. So what I'm actually right now doing is that I concentrate all my cash flows on the stock market and also on the cryptocurrency market, because this is also very interesting. But it's only a small part of my investments, like 2 or 3%. So that's my plan right now, and it worked last week very well. And also the peer-to-peer platforms, except Groupier and Monetera, are really stable. So everything is fine. Thanks to God, I was not invested in Monetera, but in Groupier. But yeah, that's a kind of risk we all have to take, I think.
Mm-hmm. I know that also you were part of organizing this peer-to-peer conference in Riga this summer. Can you tell us a bit more? What is the status? Is it postponed? Is it going to happen? Do you have some update on that?
Yes, I think we will reschedule it to Q3 because, we don't know if we can fly, and also some flights already canceled in June. And we are also not sure if we can make it in Q3. So maybe we will do it this year completely online. I think this is also a good chance. But also I think that we need definitely this conference to keep everyone updated and talk about things going on right now with Groupier and the other scams, or I'm not sure if Groupier is a scam, but also this whole industry situation. So we have to talk about this, and we will definitely make this conference. But I'm not sure if offline or online or in Q3 or in June. We will see.
Okay. Also, before moving to Alex, a few words from me. What has been going on VIVENTOR since last webcast? So we continue to work on the technical adjustments that we have made, mainly the funds in transit feature and the loan extensions features, which were basically implemented to manage the cash flow situation that we have right now with, as you Lars mentioned, with the increasing amount of withdrawals and not so much increasing amount of deposits. So we had a negative situation, and since we operate as most all platforms operate on a weekly settlement basis, so we had a few days in arrears to pay the withdrawals and for other loan originator settlements. So but for now I hope that at the moment of this recording and when the investors will see that this recording, that we will have all the settlements done, because I was informed that today was the day that when we were able to complete all our withdrawal requests that were dragging for a few days. And for after now, of course, there will be another situation that we will be dealing with, but it's the situation with funds in transit of our loan originators. So we have a few loan originators who are still late to pay for settlements because they have problems collecting the funds from their borrowers. And when this happens, they are asking for loan extensions, and our loan extensions are still just recently implemented. So everybody is learning it on the go. So there might be some turbulence in this as well for a few days. So I kindly ask all investors to have some, let's say, what's the word, to help us manage this by not getting too nervous unnecessarily. Everything is under control. We are managing the situation. We are talking to all loan originators on a daily basis. I see there are questions here on Sli.do. We will come back to that and I will discuss in more detail, but we are working hard to fix this, and I do believe that in a few days everything will be clarified to all our investors. Now moving to Alex. Alex, you are from, I understand you're Dutch. You're from Netherlands.
From Holland, yes.
From Holland, but your business is in Spain. Can you tell us a little bit more about who you are and how did you end up doing this Ibancar business?
Yeah. I am Dutch. I've never lived in Holland. I spent most of my career working in London. I'm an investment banker, was an investment banker, and ended up moving to Spain. I got a bit fed up with the rain. I've been here since 2008, but in 2015 we launched the Ibancar product. Specifically because we saw that there was a huge need in online consumer lending, which was basically being served by payday loans. A lot of people offering short-term loans at pretty high interest rates. And there seemed to us to be a lack of an alternative to bank lending. So if you wanted to borrow 5,000 or 10,000 euros quickly, the only place you could go, well, there was nowhere you could go, because you would have to go to your bank, and your bank would not generally do that in a couple of days. The banks are still slow today. So what we wanted to do is address the same market, the same borrowers as the payday lenders, but with a product which was longer and, in our opinion, more suitable and more reasonably priced. Because I think that's still a trend we're seeing. People are moving into more term loans away from payday loans. So we figured out the things we didn't like about the payday loan market, which were obviously A, the cost, B, the fact that it was very strongly algorithm driven, and that a lot of people were automatically discarded from the credit process. If you didn't have the right income, or you didn't live in the right postcode, or weren't employed long enough. This whole business is automated, so there's a lot of exclusion there. So we wanted to address that, and also the high delinquency levels, the high non-performing levels that are expected in a payday loan book, which are compensated for with a high interest rate. So in order to address all of that together, we decided to put together a technological model which was based on the marketing approach of online lending, payday lending. But we had to bring in some way of reducing the non-performing loan rates, which would allow us then to bring the interest rates down. Hence the use of collateral. And that's why we ended up using people's cars as collateral for consumer loans. So at the moment, we are a online collateralized lending platform. It's still a personal loan, but if someone doesn't pay, their car is basically a guarantee, can be forfeited in payment. This allows us to offer loans up to 36 months, and at the moment up to 6,000 euros, although we're continuously looking at how we could extend that. And because of the collateral aspect, we are much more inclusive. We have different ratios, different loss rates, so we can be a little bit more competitive on the cost of the loans. This has been running now since 2015. We're still a small company. We've been working on the tech, and we're probably going to start scaling more seriously towards the end of this year, or maybe even now next year, because obviously things are going a bit off track.
How many people are now working at your company?
At the moment, we are 14 people.
And did you have to lay off some of the people due to the situation, or are you keeping the full team as it was before? Let's say.
No,
March?
what we've done is we've reallocated people internally. So obviously we're lending a lot less because the funding is reduced basically. So that's the biggest thing that we've seen, because the P2P market has slowed down a lot. We have to slow down our lending in proportion. So we've reallocated people who are on the call center dealing with loan requests, and we've allocated them into risk management, into payments. So it's just a reallocation of people, but everyone's still on the payroll. We don't expect to make any cuts unless the situation gets dramatically worse, but hopefully it looks like it's slightly improving or starting to.
Did you see any customers that were asking for loan extensions from you due to this, and what is the proportion? How do you see this?
Yeah, so the way this is being dealt with at the moment, obviously we're fortunate insofar as we're a secured lender. So the behavior of our clients has always been different, and because their car is guaranteeing the loan, we tend to be one of the first things they pay. You know, people pay their rent, their mortgage, and then the collateralized loans, the other collateralized. At the moment, we're obviously seeing a lot of distress in amongst the borrowers. There are different ways we're handling that. Obviously, the first is payment holidays, but payment holidays have always been part of our contract. So every client going back to 2015 has always had the right to ask for payment holidays on an Ibancar contract. A client who has met his payment obligations for at least 6 consecutive months is entitled to request 2 payment holidays per year. Now, that means that in two out of 12 months, basically the capital is rolled to the end of the loan. So the loan is extended 2 months, and in those payment holidays, he only pays half of the interest. So that's traditionally been about 2-3% of the loan book per month, and this month it's been 13%. So we've had a significant amount of rollovers. The other thing we've been doing is some people have not been eligible because they have maybe paid late 3 months ago. So we're being a bit more flexible on the criteria. The other thing we're doing is changing payment dates. So people have already had their payment holidays, or extreme cases where we can't accept payment holidays, we're accepting the change of payment dates. So somebody who's due to pay their installment on the 23rd or the 24th, we let them change the payment date to the 10th or the 15th of the next month, and they pay again a short stub and interest period. So it's almost like a payment holiday, but shorter. And then just applying common sense, because obviously there's no point in forcing your borrowers into default when we are pretty confident that this is, for the majority of them, going to be a temporary problem. And it makes no sense to push 20% of your borrowers into default, and then, because then we turn into a car business and not a loan business, and we end up having to hire people to go and pick up cars and auction cars. And that's not what we want to do. So I think the measures are working, but as again, I think the strength of our business is the fact that it's collateralized. That changes things dramatically.
Yeah, and the collateral is contractual, or is it some kind of extra, like, let's say, governmental approval is involved, like with the mortgages of real estate, something like that?
No, no, this is one of those situations where generally we say, unfortunately, we are in an unregulated market. When we say the same for the P2P players and for the investors, unfortunately, it's not regulated, and it should be. In this case, it's maybe a small benefit that this is not a regulated market, because it means some of the moratorium rules which have been applied in Spain in particular are not applicable to us, because we are unregulated and we work by private contract. A client who does not pay, I mean, we have a very rigid, disciplined approach to non-performing loans. We don't say a non-performing loan starts at 90 days or 100 days. For us, it starts at 26 days. That's when we start to escalate, and we classify a loan as non-performing. That's when we start to threaten to recover the collateral, and then the client has a choice. Okay, so you can't keep the car and the money. You have to choose between the car and the money. So we start escalating very quickly, and it's all unilateral. So it's the whole process is laid out in the loan agreement and committed to and signed, so we can take unilateral action from day 26 onwards, although we're being more flexible at the moment.
Have you made any plans, like, for the worst case scenario, some contingency plans if the situation worsens, and how do you see your runway in the darkest, let's say, situation? That's maybe also important to.
The situation is I mean, we have the simulation we run is what happens if there is no funding, basically. So zero funding coming in, we have to live off our own means and our own P&L. We have runway until probably end of January, February. And if that situation has not improved by January, February, we have to start running down the loan book, at which point we would have to run down the loan book and reduce costs in line with the reduction in revenue. And then you wind it down. The key to winding down is obviously costs have to wind down in line with revenue. Highly unlikely, because as coincidence has it, we started work on a Series A equity round back in January, which was due to be completed at end of March, but looks like it's going to be delayed by at least a few months. But I expect that Series A to come through, so we'll be raising a significant amount of equity for expansion, and I also expect P2P to bounce back, and other things. I mean, we have access to other sources of funding, maybe more institutional, more formal, but hopefully P2P.
And the Series A funding comes for expansion in Spain, or you are looking at other geographies as well?
We're looking at international. So Ibancar is still a small company today. We have intentionally stayed a small company. So our target was to reach profitability and then maintain that. We were not fans of the business model, which was growth at all costs. I mean, you look at the unicorns who were global dominators but still loss making. We funded this business ourselves, so we've been very careful. We've been sitting at break even for a year, and that was the time to raise money, because obviously the business valuation looks better. And now we are, and we've developed the tech. We're continuously developing the platform, and now we're ready to really take off. Initially in Spain, but we are looking at least 2 other markets within the next 12 to 18 months. And then I don't know, global, hopefully. I mean, who knows? I think Europe first, though. There are definitely countries which are attractive.
Okay, good to hear. Lars, maybe you have some questions for Alex before we move to the Sli.do questions.
Yes, Alex, just to get a feeling for this, how much your funding decreased in the last months?
100%.
100%. So everything.
Well, two things happened. One is we saw that the rate of money coming in from P2P was almost dropped 100% in the first few weeks, the back end of March. So we decided there's no point in posting new loans. I mean, we still have, I think, a small amount outstanding on VIVENTOR of 30,000 or something like that. And these have been traditionally very attractive loans. They've been selling quite well, but if that stops, there's no point in trying to raise more money on P2P. So then we have to turn to the more traditional channels which we've been using. We still have some banks and third-party investors, but we don't want to push. If the market is not willing to give us money for a couple of weeks, there's no point. We're not going to start paying more interest rates. We're not going to chase the investors. I think it has to come back, organically, naturally.
That's an interesting
point.
Point.
100% is basically the answer to your question.
Okay, that's an interesting point you mentioned. We saw a lot of loan originators on Mintos, for example. They are raising their interest rates to 20, 25, 26%. Yeah. Why are you don't plan to do this, but why not? Or why do the loan originators on Mintos do this?
Well, I can't speak for other loan originators. I don't know if it's a matter of life and death. I mean, we know how interest rates work, right? Interest rates are a reflection of risk. They're supposed to help you pay for inflation, of which we have none, and what's left is a risk premium. The whole market has asked for a big risk premium in the last month. We've seen that in bond valuations. We've seen it in the high yield market. It's temporary. I think it's temporary. And if you really need, the problem is if you're low on that credit rating, and you have to start and you have to raise money, and then you have to pay 25%. It doesn't necessarily mean that it's a credit issue. It's probably just a liquidity issue, because you see investment grade corporates have rushed to the market to fund M&A transactions, and they've been very successful at raising money at record yields in this situation, simply because we have the Federal Reserve Bank and the ECB as a backstop for you can repo and refinance any bonds you buy, but in our sector we don't have that backstop. Obviously, if I could invest and then repo or get liquidity again for my investments from the central bank, we'd see rates at P2P at 8, 9, 10% again. But I don't know. Other originators, it's hard to evaluate. So I think we've all learned lessons. I think the investors also have to learn. And unfortunately, these are we're human beings. We tend to learn from mistakes and drama and crisis, and we don't learn a lot in good times.
But if you would be an investor on, let's say, VIVENTOR, and you see some loan originators, they are increasing their interest rates, would this be a red sign for you, a red flag to stop the investment in some loan originators?
I think it depends on the originator. It may be a fantastic opportunity. I think you'd have to look carefully at the originator, at the balance sheet, how leveraged they are.
If they are published, yeah.
Yeah, if they're not published, then I probably would take that as a negative signal, because it's a black box. You have to have some insight, but it may also be a good opportunity. But I admit it is difficult in the P2P market. We tend to see originators who do not have access to capital markets, to public markets. So that's why we're using P2P. And because it's unregulated, a lot of these are young companies. Some of them don't even have auditors. It's a risky market. and maybe some of the interest rates that have been paid out have not reflected that risk, and maybe 25% or 15% or 30% is a more accurate reflection of risk, but it's very hard to measure if you don't have insight. Very hard. I hope that we get some regulation, or that maybe some of the platforms, the P2P platforms, insist on the originators being audited. That would be maybe a step. That things have to evolve. But even then, I mean, the interest rates paid in the euro P2P market are significantly higher than the rates that have been paid in sterling, which is a bigger market. Someone like us in the UK would be funding at 5, 6, maybe 7%, whereas in euros we're still in double digits. So it's a question of maturity of the market as well, I think.
Okay. So that's all from my side.
Okay, cool, guys. We have 22 questions on Sli.do. I think we can answer all of them, not so much of them to do it in one go. I just have one suggestion. Actually, it was a suggestion from one of our viewers that would be good to group the questions into blocks of topics, so that we have questions for VIVENTOR, we have questions for Ibancar, and maybe we have also questions for Lars as well. I saw some, so that we can put the tags on the video, so that investors can more conveniently browse through the video, because it tends to be quite a long view. So if that works for you, gentlemen, we can proceed like that. Okay?
Yeah, that's fine. And I also saw some questions about Groupier, and I didn't ask now Alex questions about Groupier, because a lot of my questions are already in the Sli.do sheet. So
okay, so there are there, yeah. So we will come to them. Okay, so let's maybe since it's VIVENTOR peer-to-peer webcast, so maybe let's start with questions for VIVENTOR, and we will go through them one by one. And I'll just switch to the Sli.do view. Do you see it?
Yes.
Okay, cool.
Yes.
So the first question is addressed to us. Is there a maximum number of days that funds will be in transit? So currently, the feature of funds in transit has recently been implemented. So we are accumulating and seeing how this whole feature is performing right now. And basically what we see that different loan originators act differently, of course. And what I can tell you definitely is that we will be implementing a feature that significant delays in funds in transit, basically when they are later than 7 days, will be subject to interest rates. I mean, investors should be paid for the delay in money that they are not receiving on time. And after a significant delay of payment, let's say currently we are thinking about 2+ weeks, we will be doing in-depth investigation into the situation and starting, if necessary, any legal or other actions required. Of course, as we learned from other stories in our corporate history, is that it is always best to resolve any kind of the financial situation in a business dialogue, rather than initiate immediately the legal proceedings, because they can be painful and costly and take a longer time. So we're always looking at resolving the situation through business discussions and trying to find a situation that suits the needs of both the company and the investors. So the idea is, of course, that all investors get paid on time as soon as possible with interest. So that's the answer probably that I can give to this question. We will leave that to the part of Ibancars. Okay, now question to us again. Who is the owner of VIVENTOR? Can you tell us more about him? So as I said previously in the last in the first webcast, so VIVENTOR is a part of Finstar Financial Group, which is a private equity firm that operates multiple industries around the world. So they have private investors originating from Russia mostly. One of the biggest investors is Mr. Oleg Boyko in the company, and he has been there, as I know, from the start. The company, the asset management company that is Finstar Financial Group, is basically 2 billion euros assets under management company, so it's a huge enterprise. They are operating also some of the loan originators that are also present on our platform, the Digital Finance International companies, and also the VIVENTOR company, which we are basically. So it's a big financial institution operating around the world. That's basically it. Maybe Lars, you want to add more to this question, something that investors may be interested in that I could answer? I don't know.
Not in this owner question. I got a lot of or some messages about it beforehand. That this, I'm not sure if this Russian guy, what was his name?
Oleg Boyko.
Okay, that he is involved in some shady stuff, but I'm not sure. I didn't research about this. But I asked to put these questions also into the Sli.do board. No, I have no questions to this anymore.
Okay, cool. So moving on. Will we receive interest if funds are staying longer than a week in transit? So the answer is yes. We are working on technical implementation of this feature. It will take a while to program it properly, but definitely our agreements and contracts with which we have with loan originators mention this, the fact that delays in payments are subject to interest, and we will implement this definitely. Also a similar question about funds in transit. Will there be consequences if loan originators are having too many funds in transit? Will they be blocked? By blocked, I'm not sure how to answer this question correctly, but I would say that definitely we will be taking first of all deeper investigation into the situation. Unfortunately, now we cannot travel to the office of the company, but we will start pushing and as much as possible remotely. And we have a network of lawyers around in each country where our loan originators operate, so we can do that locally as well. And we will do both business investigation and legal action if it will be necessary. How can an investor be sure that VIVENTOR is actually using all his funds for investments and not planning to run off with half of the money as other platforms? So currently, as I said previously as well, all investors' funds are kept in a separate bank account, in a separate even bank from our own company account, where we operate our invoices and our salaries, etc. It is not accounted in our balance sheet, and we are not taking any money from it or for our own operations or depositing any money to it from our own operations. The only time when we are depositing money from our business account to our settlement account, which we call it, is when we are paying our investors for bonuses like referral fees, etc., which is basically a bonus fee from VIVENTOR to investors. So this account is kept separately, and we do not operate it on our balance sheet. Unfortunately, there is no, let's say, regulation that would ensure that this is happening. But as I said previously, we are currently undergoing a financial brokerage institution licensing procedure in Latvia, where the whole operation of VIVENTOR will be overlooked by the regulator in Latvia, which is a government institution. So we initially planned to already receive this license approximately around, not this time, but maybe May, June. But now, of course, there are some delays in the processes because we cannot do everything as fast and as personal as previously. Hopefully, during the summer, we will get either more information about the date, or we will even get the license. So after we get this license, the instruments that we are trading will become securitized, collateralized debt obligations, and the whole operation of VIVENTOR will be under supervision of supervisory authority in Latvia. Until then, it is investors' trust and our word that we are doing everything correctly. So
you plan to get this license this year?
Yes, definitely.
Okay. Because I heard from Via Invest that this process is really complicated and they have to restructure their whole company and so on. Well,
the way that we have submitted the business model, I think it's a little bit of corporate secret, maybe if any old platforms are doing it differently, but as much as I can disclose is that we aim to have as much as for the investor, the business flow will be as much as possible similar to what it is now. So there will not be a lot of new changes to business model. Probably what will visibly be seen is that we will be required by law to abide to the MiFID regulation, to make sure that we inform all investors about the risks they are taking, and that we do not allow those investors who do not understand the risks to make the investments. So there will be some tests involved, and about the financial literacy of investors and things like that. And of course, very strict anti-money laundering requirements will be in place as around Europe it is happening as well.
Yeah, what you also can think about is about IBAN accounts for your customers. I think this is also combined with the electronic money license. But in this case, every investor has has a control of his money. And
that is another idea which we are also working on. We have started discussions, not yet we have started also technical investigation of how to implement the feature, but we are looking into the company called Lemonway. They are a payment services provider from France, and they have a license to do what you say, to basically allow each investor to have their own individual account in their company, which is separated from any other funds of other investors. So that will bring even more transparency if we will complete this implementation, which I hope we will.
Yeah, I think with this you will gain a lot of trust in the investor community, because if you don't have this, we have only to trust on your words. And for example, at Groupier right now, I have their I don't know, €2,000, but I don't have I cannot withdraw it because the company has the control about this money. And with IBAN accounts, you have the full control by yourself.
Yeah, that's definitely true. That's definitely true. And that's a very good idea. I think we will definitely move to that direction. Okay, sharing screen again, moving forward to the questions.
By the way, I found this information about this Oleg Boyko. I don't want to discuss this now, but I will send it to you later. Maybe you can make a statement about this in your next webcast, because I'm not familiar with the situation, but I think it's worth for you to check it out.
Sure, no problem. Okay, since April 1st, more than 90% of my returns are now funds in transit, not from a single loan originator, but many. Do the loan originators have liquidity problems, or when will this change? Yes, we have still some loan originators who are late to pay for their investors, and some originators are already paying on time. But as I said before we implemented funds in transit, a lot of loan originators still had some funds that were still needed to be paid for us on time. And after implementation, all this became clear to investors how much money is still in transit. And Yes, some loan originators are struggling to pay on time with them, and they're receiving a lot of requests from their borrowers to postpone payments because of the situation in the world, and this is related to both funds in transit and loan extensions as a one thing, because if they are extending the loans for many days ahead, but by our platform are already required to buy back the whole claim, but the investor will not be, but the borrower will not be paying on time, and this amount of borrowers is rather high, then of course they will have some liquidity problems. But that's how we are trying to solve it, through allowing them to give some kind of delay to pay themselves. So hopefully investors will understand it, and then we will be able to walk out of this situation without significant damage to the loan originators, especially those who have a lot of funding coming from peer-to-peer platforms. So when will this change? To answer that part of this question, I hope it will change when the downwards curve of the economic let's say downturn will start to flatten out, and we will start to climbing up. I don't know. Yesterday I saw on the news that this industrial decrease of production and of GDP will be like a V. It's expected that it will be like a V shape, meaning that it will be a fast drop, but also a quite steady increase afterwards. Hopefully it will be like that. Hopes are high, but who knows? Let's see.
Hopefully no L shape.
Yeah. Will you display more statistics in the future? Really interesting would be a statistics per loan originator, for example, funds in transit via payments made. Yes, we plan to introduce a lot of statistics and also a feature that our investors would be able to create their own personalized dashboards and understanding of how their investments work and what the loan originators are, how the loan originators are performing, and this is in the plans. But of course now we are focusing mostly, and all of our IT team is focusing mostly on working out completely the performance of our funds in transit and loan extensions. So once we figure these things out, hopefully in a week or two from now, we will be able to continue working on other product features. Like I said before, one of them will be two-factor authentication for our investors, so more security for investments, and also the statistics feature and some of the other features that we have planned before all these things happened. We will have to do some technical adjustments due to this licensing process that we are undergoing, but definitely there will be more features coming in for our existing investors right now. Do you plan to publish audited financial statements in the near future so we can see that VIVENTOR and its numbers are being checked by an independent auditor? Yes, we plan to do a financial audit on our company and to publish this information. We will definitely do it. I just cannot tell you the date, but this year definitely. Also, do you plan to initiate any kind of license regulation procedures announced by other platforms such as Mintos, Twino, and Via Invest? So the answer is yes. I already explained. How you evaluate latest ratings released by Kristaps Mors? I think this question is referring to the scoring table that one of the bloggers is running, this where he compares all the platforms that he has tried. And personally, I know that this guy is receiving quite a lot of criticism and also praise from investors on the forums and on the chats. I personally enjoy and like his work very much. I think it is a good and very critical approach to the industry, and helps to shed some more light and some more insight on how the industry is performing. I saw that our company was rated rather low by Kristaps. I agree to most of the points that he has described. We actually today with the team went through all the bullet points that were on his scoring table that gave us low value, and we will try to work out them out so that we get a higher score, because we don't see any reason why we couldn't do that right away. So that is a good reflection of how we run, and a very good path of how to improve our business so that we are seen as a more stable and trustworthy platform by our investors. So thank you, Kristaps, for criticism. That's my answer.
What is the most important point for you from this rating, what you will go on next?
I think what we discussed, more stability and openness for investors, mainly opening up our company, showing audited financial statements, showing who we are, our team, what experience and competence we have, explaining more about our shareholders and structure and source of funds, all these things that are important to investors.
Mm-hmm. And if you say, yeah, we want to publish this, what time range do you plan for do this?
Difficult to say. Now we received this information only today. We had many activities planned to this webcast, which we are doing now, is one of our activities which we are doing to bring more transparency to us in the industry for investors. So we will put them in the timeline definitely, and I think within the coming months, we will start working on the issues one by one. Maybe some of them we will do very soon.
Yeah, the question why I ask is because right now it's really important, because his main subject was if you are gone, then good luck to reach anyone. So because VIVENTOR is owned by another company, and this is owned by a company offshore, and this is a problem for a lot of investors.
I think this is one of the first questions that we will tackle, and we will bring more clarity and stability to about this question to all investors very soon.
Great.
Sorry, my eyes are moving because I have two screens, so I sometimes look up to see what's on the next screen. Okay. Quick overview of which loan originator funds are in transit and how much. I think it is best that we release this as a separate information block to our investors as an email with the table listing all this information so that everybody is understanding what is happening. And while we develop this statistics feature, of course, later you will be able to see it live in the platform, these numbers. But for now, let's say that we in the nearest future will release some information about our loan originators and how much money they have in transit, for how long, how much, and how well they are repaying their obligations, so that until we develop the statistics feature on the platform. So we will send it to our investors in I don't know, a few days from now. What is the financial situation of VIVENTOR? Third time I have this question, I think. So as I said, our shareholder is really well funded with lots of investments and diversified investments, and current situation is stable. We have increased our capital. Basically, this means that our investor has capitalized the debt, the loan that he has always given to VIVENTOR, because we have been always are a loss-making company because of all the marketing activities that we have been doing and the growth of the company. And we're expected to reach a break-even point end of this year. I think it's still doable, but more realistic to look at first, second quarter next year now, as the situation has put us a few months back in terms of let's say portfolio growth. But otherwise, we have our existing funding, which comes from some of our funds comes from the revenue, and some of what is missing comes from the investments into the company from the shareholder. And the plans are here. It's clear business model. I mean, we have to reach a certain point in our portfolio where our break-even point will come, and from then on we will turn into a profitable company. So that is how we are viewing the situation, and how our shareholders are viewing the situation, and the plan is to continue on this model. Okay. What is the maximum time funds can stay in transit? I think this question was there. Do you plan any new loan originator on the platform within the next 3 months? I think yes. We always had a big pipeline of companies that wanted to join our platform, and we are currently in discussions with a few of them. I would not like maybe to disclose some information, but about who they are, because it's just early discussions. But what we're looking into right now is that, of course, it is now very important to understand how the company is dealing with the situation and what capacity it has to run the business. So, for example, probably companies that have physical distribution networks have much worse conditions to operate than those companies who have purely online business. And what is the business model, how well they can adapt and have adapted to the situation, and how they will use the funds, the money, and what is the risk strategy. So all these questions are now very, very important. So that's basically it. And I think we reached the last question for VIVENTOR. So here will be the last question from the Sli.do community. Lars, maybe you have some more questions for me as an investor, that before we turn to questions for Ibancar.
Yes, maybe you can give us a quick update about your collaboration with A40.
We are undergoing some procedures, some legal procedures with them, towards them, which were outlined in our agreement. All investors who have invested in A40 have been informed about this situation. Unfortunately, I cannot, openly talk about the subject, because I might breach the agreement which we reached with this company, and I don't want to put any investors in danger just talking about this openly in public. So I just can tell you that there is an agreement that we are not talking about this in public, but we are doing all that we can and acting according to our agreement with lawyers to make sure that all our investors' funds are protected and are collected as soundly as possible. So more updates will come when there is an update on the process, because it's, when it's a legal process, it takes some time. And now with the closing of all the offices and public offices, it takes longer time. So when we will have the next update, I hope we will have this update next week. We will update about the situation, all our investors, what's been going on.
Okay. So in my introduction, I said that I saw in my statistics from the last week that the interest in peer-to-peer lending is a little bit increasing already. So I think the reason is because the stock market is already high. Do you see this also on VIVENTOR? And yeah, what do you think about this? Is already the end of the crisis, or can we still expect decreasing funding in the next, I don't know, 3 to 4 months?
What we mentioned, what we saw from the very beginning when the first cases of this coronavirus started to happen, and when this thing we understood that will take longer time, we saw that investors were basically withdrawing money from the platform, and our portfolio was starting to decrease for the first time in history. We have been always in a growing stage, and now it is the first time when we saw a decrease in our portfolio. And this means that many of our investors are investing with auto invest feature. This feature means that you're not making investments automatically, but rather set some rules how to make investments and which loan originators to invest in. So we saw that investors have started to disable auto invest algorithms so that their money starts to accumulate on their account and then withdrawing this money. What we see now that the withdrawals have stopped to the level that they not stopped completely, but decreased to the level that they were before, let's say in February and January. So the levels are no longer that big. And we saw which is optimistic, that the number of new registrations of our investors have also started to increase, although we removed all of our marketing activities like paid ads, etc. So the only thing we are running now is the referral program. But those investors who are not coming through referral program. Probably it's a word of mouth, and that is a positive thing. And I do hope that it's in part due to the efforts we are taking to bring more openness and transparency to the public. And yeah, so I see it as a flattening downwards curve right now. I hope it will not go down anymore, and we will see growing investments afterwards. Like Alex said earlier today, that they haven't been getting any new investments on the platform. So yeah, investors are still cautious and looking at where to invest and choose how to invest. So hopefully this interview will also serve as a, let's say, impulse for some investors to consider investing into Ibancar again.
Yeah, I think this is the first good sign. What do you think? Is peer-to-peer investing also a good investment right now during the crisis? I think for me personally, it was a great time. So everything is quite stable, except of some platforms. And in the last years, I used peer-to-peer lending also as a stabilizer in my portfolio. And this is why it's right now really important to keep this investment also. But what do you think? Is it a good idea to start investing now in this during the Corona crisis in peer-to-peer lending?
If I would say like that, if you consider yourself a professional investor, and if you are investing into many asset classes before, it's a good always alternative to equity markets, because it is a stable fixed revenue income. Equity markets are now jumping like a roller coaster. We saw biggest drops since I don't know, Great Depression, and biggest increases since 2008 crisis, and things like that can make a lot of people very rich or very poor, you know. And here we had a lot of, at least on VIVENTOR platform, we had a lot of concerns and panic and questions from investors. But you know, in the end, everybody got paid and everybody got the interest on time. Not on time, maybe later than required, but everybody got the money back and with interest and with late fees when required. So everything so far turns out that the machine is working. And I would say that of course it is a risky asset class. The interest rates reflect that. But in general, if you diversify your investments and if you do the research into companies you are investing and into markets where they operate, you can make good, safe investments. Even those who had unfortunate events with some of our other loan originators, I think in overall are in a positive outcome if they have a good diversification.
Okay. Yeah, thanks. That's all from my side.
Okay. So let's move on to the questions on Sli.do for Alex. I think we have 8 questions for you. And also feel free, Lars, to jump in and ask your questions if you see that some more comment is necessary.
Sure.
So, question number 1 that received the most upvotes on Sli.do. What's the relation between Ibancar and Groupier? What steps is Ibancar undertaking so the loans are in the end paid back to investors?
Well, the brief answer is the relationship is pretty similar to the relationship that the investors have with Groupier at this stage, is that it's non-existent. We've had no communication with Groupier since the 9th of March, I think, which is when our last payment was due, capital repayment and interest. And since then, any information we have obtained has come via second-hand channels, so via people like Lars and other bloggers and investors who have been calling us and writing to us. So I have really, unfortunately, no new information on that. It's a bit of a black hole. The money, I think we've answered a few investors, although I don't know to what extent we were going to be in breach of confidentiality agreements with Groupier, but I think all that is a bit irrelevant at this stage. I think at the last check we had 178. It was not a huge number, 177 or 178,000 of capital outstanding plus interest. And there was a discrepancy with what was on the website of I think 20,000 euros, which seems to have gotten lost. But as far as we're concerned, on our balance sheets, there's still the money that's still with us is still performing and is still in loans and will not be paid to Groupier, and it will sit on our balance sheet until there is some kind of a resolution or a liquidator, or we are authorized by some authority to repay the money directly to the investors once identified. You have to remember that the investors are anonymous to us, so the platforms all work in the same way. We have one counterparty who is the platform, and the platform protects the identity of its investors. So we're learning the identity of some investors because they're writing to us, but we can't verify whether or not that they, whether they are genuine investors. So it's a big black hole for us. All we can do is make sure that the money stays safe and is returned once there is an established procedure for liquidating.
I will send you my 6 loans afterwards, Alex.
Okay. Yeah.
It's really
no,
bad.
I mean, we're receiving quite a few emails, as you can imagine, and we're trying to reply to everyone individually. We're assuming that the information people are giving us is correct. We can't, as I said, we can't verify the individual investors, but investors who have, a loan number and a maturity date, that we can verify. We have the numbers, but Ibancar is a successful business. It's a safe business. Our loans are collateralized. When there are defaults in our loan book, it doesn't affect our balance sheet because we have collateral. So the equity that is lost belongs to the borrower in the form of a car, which he loses, and that money, and we are just ensuring that money is recovered. So this is a safe business. It's about as safe as you can get, and it's better than a mortgage business because it's more liquid. Cars are easier to sell than houses. So What we should worry about is if there are actually discrepancies between the money that we have repaid to Groupier and that has not been repaid to investors. As I say, there it seems at first sight there's a small gap of some 20,000 euros, but nobody knows, until we add up all the loans, all the investors, and all the payments and net everything out, what it is. But if it is 20,000 euros, that's, well, it's bad, but it's not as bad as it could be. I'm sure that there are, from what I've gathered, there were some originators on the Groupier platform who were perhaps not real genuine originators, in which case the difference would not be 20,000 euros, it may be significantly more.
Yeah, that is true. But it means you stopped all payments to Groupier, and this means also that the money on your side is safe. So there is some money left, which could be paid out somewhere in the future to the investors.
Well, we will meet all our obligations. So the 170 or 180,000 euros that is outstanding capital plus all interest that is due on that will be paid out in full at the pre-arranged maturity dates. So as the capital amortizes on our books, it will be at the moment it's being segregated and being held on account, and all that money is not our money. I mean, we're a money shop insofar as our raw material is someone else's money. Right? We invest someone else's money, and when it's paid back, we give it back. We keep the margin, but the capital is very clearly segregated and accounted for. And in the case of Groupier, it's close to 180,000.
Maybe can you explain how you start your collaboration with Groupier? I think it was 2 years ago,
yeah,
something like this.
And I think it was just over a year ago. I don't think it's been that long. We did. We actually started with VIVENTOR. I think that was a little more than a year ago, and we did it. We were curious, to be honest. We're not P2P experts. We come from a more traditional finance background, but we were curious. I can't remember how we got in touch with VIVENTOR. I think it was a referral from another originator we're in the investment market, and we talked to the same investors. And we thought we would do an experiment. And I think that was October 2018 or something like that. And that we thought, let's give this a go, because we want to live in the alternative finance world. We don't want to be a bank. We don't want to rely on banks. Ideally, we want to rely on funding from alternative finance as well. And that was quite successful. And then when that was successful, we started looking around for other platforms. We found that the biggest markets being China, UK, and the US were not open to us because we're simply not willing to take the foreign exchange mismatch, the risks that would imply. So we stuck to euros, and in euros, it's still quite a small market, to be honest. If you eliminate the platforms which are working back to back, basically funding their own loans, and you take the open platforms, and you knock out Mintos, because we're too small for Mintos at this stage. You had Juvo, VIVENTOR, Groupier, and then a number of smaller ones, Bonster, Fast Invest, I think. So it's not as if there were dozens of them. And then we started with Juvo and Groupier, and it looked like everything was working pretty smoothly. Groupier was interesting because Groupier allowed the bundling of SME of our loans as collateral for an SME loan, insofar as it's an interesting product from a cash flow perspective, because they were permitting bullet loans. So we could bundle 3-year loans and pay them back at bullet in 3 years' time, which is very different to the way Juvo and VIVENTOR work, obviously. So because we mix and match, we've been alternating between the platforms, and we haven't been massively debt funding. But for us, even though it's been over a year, it's still a learning process. It's still a little bit experimental. We still wonder whether this is the best way to fund our business if we go international and we have to start taking currency risks. So and we see today, I mean, it's a market which is not yet mature. It still needs supervision from people like you. I think is in the absence of regulation and the absence of auditors, we as originators also rely on you and people like you to get information. The platforms in principle should not fail, right? I mean, we checked Groupir, we checked their money laundering manual, we checked their procedures, the shareholders, as far as we can. And you're always going to see the same thing, you know, that they are segregating capital from their own revenue, from fee income, that they comply with money laundering regulations. And there's, unless they're audited, as you mentioned previously, there's the only way they can fail is if there's some kind of fraud, to be honest, because in the end they're only they're a bypass, right? The only thing they're doing is taking money from one person and handing it to the other. There's no reason for that money to disappear unless you're spending it on something that you shouldn't be, because it's not your money. It's difficult, very difficult.
It is, yeah. So maybe we can go to the next question. Otherwise, we are talking for hours.
I see. It's important in conversation. That's the next question is actually on the same topic, but directed to you, Lars. Lars, thank you for all your awesome content. You helped me a lot in the past. How do you deal with Groupir as an investor?
Yeah, how do I deal? Mainly, I write all my money personally off and go on with my investment. So I had there only a few thousand of euros. So for some people, it is a lot, but not for my portfolio. So it's a nice vacation with my girlfriend, but that's all. So yeah, I mean, I cannot do anything right now, like Alex, you also. So I just support the community and answer the questions. And that's all. And I just watching the situation, what's going on, and watching also this shitty blog post from Groupir. And yeah, I hope there will something good in the future. But honestly, I cannot do anything. So, but I just write the money off for myself to go on and don't think about all this mess. That's all.
Understandable. Okay, guys, let's move on. What do we have next? Next is a question to Ibancar. What is your current default rate? How are you controlling your default levels at the moment?
Okay. Well, first thing is default rate. Well, I'll just answer the question and then I'll explain. Default rate as of yesterday, 5 p.m., 7.08%. Of the loan book is what we consider a non-performing loan, i.e. beyond 26 days late payment, at which point we start to escalate the procedure. A default at Ibancar does not represent a loss, so we are not going to lose that 7.08% and try and recover it from the interest payments of other borrowers. The 7.808% capital, if it is lost, because at the moment it's non-performing, will be recovered through the collateral that the borrower holds. So the beauty of collateralized lending is that when we offer, for example, a buyback guarantee to investors, that every buyback does not weaken our balance sheet. It's not that we have to provide, we have to pay this out of our own equity or our own revenues. It doesn't weaken our balance sheet because we basically advance the money in the form of a buyback, and then we do what we're in business to do, which is recover the collateral from the defaulted loan. We recover a car, we auction the car, and we get the money back that we've used to pay the buyback. So so we have a recovery rate which is I think 119% over the last 5 years. Which means that every time a loan defaults and is bought back from an investor, we end up actually recovering more capital than the money that has been defaulted. So it's actually a small profit center when we auction the cars. It doesn't mean that we win on every car that is auctioned. It means that because sometimes the car we get back is in very bad shape, and that's why the client has stopped paying, because he's crashed his car, or he's scratched his car, or he's put 300,000 kilometers on his car, and he knows that it's not worth the amount he's borrowed. So in some cases we lose, and in some cases we have a profit. But overall, over the 5-year period, if we manage the loan to value very well, and the costs of recovery, which are significant, it costs us about €1,000 to recover a car. But historically, so we have 0 credit losses over 5 years. We have actually credit profits, and at the moment, the number of loans that are in escalation, so between being late, 26 days late, and going towards recovery, are 7.08% of the loan book. Was there another part to that question, or
no?
Did I answer it?
I think you answered that. How is Ibancar managing the situation with the borrowers, clients, given the current crisis of the COVID-19 and its implications to make payments in time?
Okay. Yeah, we're doing several things. Obviously, we've scaled back lending. That's the first thing we've done. There's no point in lending in this uncertain environment, because what we don't want to do is give money to people who have problems and are going to lose their car. It's just not part of our philosophy. We don't want to recover cars, and we don't want to have defaulted loans. So we've scaled back lending at the moment. We've allocated people to our payments department, so we have more people on the phone. Clients are getting more phone calls from us, and more emails, and more reminders. Again, because we don't want to escalate, and we don't want to be recovering cars. Ibancar clients have 2 payment holidays. I think we mentioned this briefly at the beginning of the call, that every client who is meeting his payment obligations, whether there is a crisis now or not, this is just normal practice for us, can take 2 payment holidays per year, at which point he does not pay capital, and he only pays half the interest in 1 month. You can do that twice a year. We have had of 490 contracts, we have had 46 payment holidays this month. So, and I think some more today. So we're probably just over 10% of payment holidays, which makes it manageable. It means, obviously, it means we have less revenue this month, but it just extends the duration of the loan by 1 month, and we're not talking a huge amount. I think we're talking, as I said, 45 or 48 payments, so 10% of the loan book. The other thing we're doing is being flexible on payment dates. So clients who are due to pay on the 25th and have already used their payment holidays, we're rolling the payment dates. That's another contractual entitlement that they have as part of the loan agreement. They can change their payment date. So they're rolling the payment dates. It's a bit like a mini payment holiday. And besides that, we're just being sensible. There is, as I said, there's no point in pushing loans into default when we know that the client is in a temporary problem situation, which is, and in Spain, a lot of people have been furloughed, so they haven't been fired. They've been temporarily put on leave, and they're still making 70% of their salary. And we only lend to people who are employed, so they're generally in one of 2 situations. They're either still employed, in which case they may have a problem, but it's not a huge problem, or they've been furloughed, in which case they have 70% of their income, so they still have. There's also been a mortgage moratorium and a rental moratorium. So I think one of the perverse situations here, and the consequences of the Spanish measures, is that many borrowers actually may have more liquidity now than they did before, because they may not be paying their mortgage or their rent. And
or do not go out so much, so that they do not have, and they're not spending to spend.
They're definitely not spending. We saw a study that supermarket spending is up 100%, and everything else is down between 50 and 90%. So I think liquidity, I think a lot of people want to take advantage of this situation to not pay. I think there are some people out there who obviously think, there's a big crisis. I'm going to see how much money I can keep in the bank, which is what the investors do when they start selling their shares, and everyone goes for cash. So everyone wants to have money in the bank. But I think we're doing okay simply because we have the collateral, and the psychology of a collateralized loan is completely different. The borrowers tend to worry about paying us back as opposed to us being worried about getting the money back. We know that it's either the car or it's the money, and it's the borrower's choice. It's the easy way or the hard way, basically. But we're doing okay. I mean, late payments are up a bit at the moment. We have 6% of the loan book is late, so that's not yet 26 days. So it's perfectly manageable so far. Okay. See how long this situation lasts.
Some more questions about your portfolio, and the question is, what is Ibancar's loan book size, and what are your if all your loans are collateralized? If so, what's your average loan to value ratio?
Okay, so we're still a very small company. I think that's we're fortunate that we're one of the fortunate companies. I think that A, we're collateralized, B, we've been established for a few years, so we have very well honed procedures, and C, we're still small, which in a crisis like this is I think a benefit. So our loan book at the moment is around 1.2 million. We're still in this early growth stage. We didn't complete our Series A round yet, so the strong growth has been postponed until probably after the summer. And all our loans are collateralized, so we only issue collateralized loans. The way we collateralize the loans is the first thing we assess is the value of the car, and based on the value of the car, we determine how much to lend to a client, and then we figure out that if the installment is more than 30% of the client's income, then we further adjust the loan amount down. So we start with a maximum loan to value, and then it decreases depending on income. The average loan to value on the loan book as of today is 43%. And 100% of the loan book is collateralized. Every loan has a car.
And your loans are not directly, let's say, addressed to buying the car. It's basically you're already owning a car and you are borrowing to have some money, but putting your own existing car on mortgage, right?
Exactly. So it's a personal loan, where and the contract says it is a personal loan, but your car is collateral. Yeah. If a client defaults, we have the option of pursuing the personal loan through the courts or recovering the car. In some cases, when we are unable to recover the car, I mean, it has happened, I think, 6 or 8 times in 5 years. The car is hidden, disappeared, stolen, I don't know, untraceable. We have the option of still pursuing the loan through the courts, at which point it's an unsecured loan, and it can take a long time to get the money back in that case. If it's a car, it takes 2 months.
And who does the evaluations of the car value?
At the moment, we use we're part of the Spanish Car Dealers Association, which is an association called GAN-BAM. They publish quarterly the buy price and the sell price of every car model in the market, so that you can see that the dealer is buying at this and selling at this. We use the buy price, obviously, which is the lower end of the market, and we apply a maximum loan to value of 60% to that. Our loan book, and basically the loan amortizes faster than the car depreciates. So the point of maximum risk, the maximum loan to value, is at the beginning of the loan.
And how old can the car be so that you can still put it on collateral for you?
Depends on the model. So if you have a BMW or Mercedes or a car which is in demand, the Volkswagen Golf, the Seat Ibiza, it can be up to 12 years old.
Okay.
If you have we have a certain criteria depending on the value and the brand of the car, and that determines, and then the length of the loan. If you have an old car, we won't lend to you for 3 years. If you have a 12-year-old Mercedes, which is still worth 10,000 euros, we'll lend to you for 1 year. So there's a cutoff period.
Okay.
All based on the depreciation of the vehicles.
In this coronavirus situation, are there any car trades still happening in the market? I mean,
No.
are people buying cars right now?
No. What happened is at the same time as the P2P market dried up, the car auctions dried up. So so we use the car auctions to sell the cars. It's the quickest way you can sell a car in 5 minutes. So the big players, called BCA and Auto 1, which I think is a German company, the auction stopped. But I think BCA started again this Monday. Auto 1 is going to start again next Monday. I don't know if there's going to be a lot of activity on the auctions. Obviously, people are holding on to liquidity. People are not out buying cars, so I don't expect it to pick up very quickly. But at the moment, we only have 3 cars to sell. So we tend to sell. We don't usually sell them one by one. We sell them in batches. So we accumulate 5 or 6 or 10 cars. Then they send an expert over to do an inspection, a technical inspection, evaluation of the car. It goes on the website of the auction with the whole report, and then we sell them in batches. So yeah, there's, I mean, I don't know what car values are going to do. I would expect that in the short term, we're going to see a bit of a dip in car values, but we're at an average loan book LTV of 43%. So I think we have plenty of margin.
You have a bit of margin, yeah.
Mm.
Okay, we covered that one. We have 3 more to go. What makes Ibancar loan stand out from the rest of loan originators? Why choose your loans over the other loan originators? I think.
Well, yeah, I don't know about choosing them over other originators. I think the whole P2P market. I mean, we can't refer to originators on the P2P market as the P2P market. Every investor in the P2P market has to pick his originators. You can't just go onto a platform like VIVENTOR or Euro or Groupier and say, I'm going to put 10,000 euros in all the originators and all the maturities. You really have to do your due diligence because not all originators are the same. Now, speaking for Ibancar, as I said, we are collateralized, which means that it's highly unlikely that a borrower will lose money, and any losses are not absorbed by us. So our balance sheet strength is not as relevant as for an unsecured lender. If someone is doing payday loans, which are unsecured, and they all of a sudden have a default rate of 40%, which is, has happened in that sector, they either have to have the clients that are still paying make up for that loss, or they have to make up for themselves with their reserves and provisions out of their own equity. So that weakens their balance sheet. In our case, a defaulted loan means we go out and we recover the car. We'll lose 100 euros or earn 1,000 euros or lose 500 euros. It is not going to materially affect our balance sheet. So in that respect, the collateral makes a big difference. We have a 5-year track record, although we're still a small company because we've been building the tech. We have a 5-year track record. Our non-performing loan percentage varies between 5.5% and 8%. Today it's at 7.08%, so it's still constant, and the recovery on that is over 100%. So I mean, we have an exceptional track record. In our opinion, we still pay too much interest on the P2P market. It doesn't reflect the risk, but that's where the market is. So yeah, I think we've proved that we're probably one of the safest out there. And the beauty of the car is it's liquid, right? Obviously, it's very safe to borrow it against property as well, but it's not as easy to recover a property and sell it. I mean, we get it turned around in 60 days.
Mm. Clear. So a few more questions. Yeah, a question again about the topic we just discussed, how Ibancar is going to deal with Groupier and what lessons did you learn by selecting the platform?
Well, how we're going to deal with it is I don't know is the simple answer. I'm not sure what the wind-up procedure is for a platform. I'm not sure how that works. I am hoping that at some point, I mean, I've read nothing about this in the news. I've read about it on blogs and I've spoken to people about it, but I haven't read anything in the newspapers or any news channels, formal news channels. So it seems to be happening under the radar. And actually, that's not true. I did get a letter from one lawyer in Barcelona. Said he was representing a group of investors, and they wanted information from us to act as witnesses in a case against Group. So obviously we're helping with that, but I don't think that's going to get anywhere. I think that at some point domestically, someone will have to appoint an investigator or a liquidator or an auditor, or an accountant, to go through the books and recover what assets are there. And unfortunately, I think we're in a position where we can't do anything until someone is appointed to oversee that liquidation, if it is a liquidation. And unfortunately, I mean, I can imagine that the money that we owe to the investors, this 180,000 euros, may not actually reach the investors, because if there has been a fraud, I would expect that the liquidator is going to try and recover all the assets that he can from Ibancar or from everywhere that he can find them. And then they will probably be distributed evenly amongst the investors, so that every investor, I don't know, ends up recovering the same percentage. I'm not sure how the contracts go between investors and the platform. But in a liquidation or a wind-up, I'm not sure if any one investor is going to be prioritized over any other. I'm not sure. But we have to wait and see what the procedure is. I'm not sure if this has happened before in Europe.
And if there are any lessons learned about that, what would they be?
We need regulation. I think the investor community has to be listened to. I think when there's no smoke without fire. So the minute that there are there's bad press, bad messages, bad blogs, everyone should heed that, should take notice of that, because I mean, if money starts getting paid late, there's a problem, because it shouldn't happen. I would encourage investors to talk to the originators where possible. I mean, we try to communicate with them. In the specific case of Group Era, yeah, I don't know. I didn't think there was anything wrong there until I saw an interview recently that was done by another blogger, Bernard Hummel, who was over there recently. And I was very surprised, shocked by that interview. It did make it look like it was a very shaky organization. But unless, I don't know how you figure that out. If it's this is alternative finance, it's unregulated. We know the risks, right? As investors, the rates should reflect those risks. It just means that the investors have to do their homework, and probably the originators have to do more homework as well. But yeah, it doesn't mean it can't happen again. You see what's happened in China, and it's even happened in the UK a couple of times. We all have to be very careful, and I think the community has a role to play there.
Yeah, that's true. And I think it was not the last platform. One question from me: are you also in touch with other loan originators, real or loan originators from Group P?
No.
Okay, so you are not communicating under each other.
No, not at all. To be honest, I hadn't even thought of that. I'm not sure. No, I did watch the interviews with interest, and I did reach the conclusion that maybe not all the originators on that platform were genuine, and that not all the funds ended up in the place that they were intended to end up. But no, we haven't been in touch with any. The only person we have spoken to has been me, my team has spoken to the finance people, but I think there'll be some changes there as well. I spoke to Alec Iska, I think 2 times in the last year. But pretty straightforward conversations, you know, just kind of staying in touch.
Yeah. Okay.
Okay, guys, and we have the last question for today from the Sli.do community. I understand that we should read it like, what is Ibancar strategy for the months or the next year to come?
Right. Well, our priority at the moment is to close our Series A round, which has been delayed as a result of everything that's going on. And then, as I said, we're still a small company today. We've been building the tech platform and preparing for growth. So you could call us an early growth stage business. The Series A is going to be the platform. And you will see us get considerably bigger in Spain. And we will be opening up in at least 2 other countries in the next 18 months, I would say. And continue to expand internationally with the backing of some venture capital investors and a syndicate of private investors as well who are coming on board.
Great. Lars, do you have any final questions to me and Melis, Alex Melis, before we summarize?
Yeah, maybe to you. You asked Alex before what he learned about Groupier. What I would ask you the same. What do you learn as a marketplace? Because I think the marketplaces are lost the most trust on all peer-to-peer platforms regarding the Groupier case. So what do you learn from this?
What I can say is generally that the industry is still young and fragile due to it being young, and there is a lot of questions raised by investors all the time, even when everything was going smooth and all the platforms were growing and everybody was getting high interest rates. Even in those times there were a lot of rumors and questions raised by investors, and now when the platforms are dropping one after another, it's definitely not helping the industry to continue, especially those companies who try and work like proper companies should be working, and who are going through this with proper business processes. And for me, it's very clear, and I fully agree with what Alex mentioned, is that we have to go through regulation, and we have to be very open and clear to investors how we operate and how their funds are protected, and to be always the party that simply operates the marketplace and not do anything that is not allowed for us to do. So that's very simple. We just stay in line with business and with the law, and it's otherwise looking, it's a good market, it's a growing market. A lot of people are turning from the regular investments into the alternative ones which we operate in, and in general there is a good growth opportunity for these markets. And I am myself personally familiar with a regulator here in Lithuania, and we discussed earlier when I was still working at a bank that nobody likes regulation, you know, but because it's a lot of reporting, a lot of compliance, you have to do a lot. It takes a lot of time and effort from your business. Like you could do business operations, but you have to do some regulatory reporting. And but in general, it is a good thing, because when there is no regulation, things start to happen and start getting out of hand. And this is what we have here right now. So for me, the lesson is very clear, that we have to be very open, very clear to how we operate and how we do the business to our investors, and in parallel to speed up our process to receive the license, which will close the topic, I think, for good.
Yeah, I think it's important that investors keep doing their due diligence. And I think it's a learning process for a lot of those people, because I don't know. I mean, we can't assume that everyone is a financial expert or an accountant or can read a balance sheet properly, or even that the balance sheets are correct. So I think regulation and audit is probably a good thing. I know one of the conditions that our venture capital investors are imposing upon us almost immediately, are going to be, we have to be audited. We have to review our money laundering procedures. We have to have a data protection officer. So all these things should apply progressively to every originator that's growing and ambitious. There should be no originator of any size in this market that is not being scrutinized and supervised in this way. I think the investors have to do their own homework as well. And it doesn't mean that fraud is going to be eliminated. It just makes it harder. It doesn't mean that somebody's not going to steal. That can happen anywhere, I suppose. Still a risk.
Yeah.
Okay, guys. So just before we close, I'd like to give a short summary of what we discussed for our investors who didn't have the time to sit with us here. So you can fast forward to the end. Of course, we discussed a lot of things, touched a lot of topics, but of course, first of all, thank you very much, Alex, for being here with us and providing more information about who you are, who your company, what your company is to our investors. Ibancar is still on the VIVENTOR platform. They are operating a consumer loan business in Spain. They have all of the loans are collateralized by the actual cars that are put on collateral by the borrowers, and this is extra security for both the company that is lending the money and of course for investors who are investing into the loans of the borrowers. The company is still let's say undergoing some sees some decrease in the borrower demand, but so far the default rates are not too high. They are increasing, but not still too high. We will see what the situation goes. The runway, as I understood from Alex, is up to the beginning of next year in the worst case. So there is still some position there to continue, even if things go way south than we expect them to. And yeah, so that's the part of that bit. For Lars, thank you very much for joining us here as well. We talked in the beginning that unfortunately we will have to postpone the peer-to-peer conference or make it into a digital version, which will be, I would really like to see it happen that way. It's still a way to communicate, and people are growing accustomed to this Zoom conferences, and yeah, hopefully we will stay in touch one way or another. It's important to stay in touch with the community, which is definitely the case. And also main maybe topic of today and lesson learned about today is that in general the peer-to-peer industry and including both investors, loan originators, and the platforms needs to have more clarity, transparency, and structure, so that everyone understands the rules that the industry is playing on and understands the things they are invested in and how the investments are working and how the money will be paid back to them. So we at VIVENTOR are doing our best to make sure that happens, and I ask all other platforms to join this, and if you haven't yet started or considered the licensing process, I definitely encourage you to do that, because with the licensing comes more transparency. With more transparency, I believe we are able to attract even more investors who are looking into this industry still as too innovatory or maybe too risky for them. So in general, the whole industry would benefit from more licensing and transparency. That's my takeaway from today. Maybe you guys also want to have a few words to summarize what we discussed, if I missed something.
No, I mean, on my side, I think yeah, this is just the perfect storm, obviously, besides the human cost, which we haven't spoken about today, but there's no reason why this market should not come back from this situation. I think everyone has had a big shock, and let's not bring Groupier into this, because I think they've just taken advantage of this situation to announce a problem which was already occurring. But I think we're very supportive of the P2P market, of the alternative finance market in general. Very keen to communicate, to provide assurances, and make sure that people realize that business and life will go back to some normality pretty soon. And there's a demand for loans, and there's a demand from the investors. And we have to get things back into balance, hopefully very quickly.
Yeah, I think so too. So I think this is also a big chance for the peer-to-peer industry to be stronger afterwards, and to be a real asset class with hopefully 4 or 5 regulated platforms in Latvia. And yeah, right now it's a roller coaster also in the stock market. And I personally like it, because it's also a nice way to buy some stocks with a nice discount. And so yeah, I think we are all set, right?
Yeah. So once again, thank you guys for joining me, and thank you all the viewers for staying with us for this time, and for all your questions that you asked, for supporting us. And we are definitely going to continue this webcasts in the next weeks. Please share with us, tell us in the comments below who would you like to see as our next guest from Loan Originator side and from investor side. We'll try to make that happen for you. Thank you very much, and goodbye.